Welcome to S&P's European loan market video overview detailing leveraged finance trends and activity during September and early October 2010. I'm Suchit Gupta, a member of S&P's Leverage Commentary and Data Team, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe before winding up with themes to watch for in October and early November. Before we start, please know that you can follow LCD on Twitter, Facebook, and can join the more than 4,000 contacts in LCD's Leveraged Loan Group on LinkedIn. The links to follow LCD are in the info section on your YouTube channel. Before getting down to business, some fine print. This disclaimer, courtesy parent company Standard & Poor's and McGraw-Hill, covers all the bases. Please read it at your leisure. After the summer lull, the market got off with a bang in September, with a strong new issue calendar for loans and high-yield bonds, as well as a buoyant secondary market. The S&P European Leveraged Loan Index, the LE, had a positive return of 0.96% ex-currency. So far this year, the LE has returned 5.1% positive, again ex-currency. You've had a series of successful new issues in the loan market that has boosted confidence amongst arrangers and investors. After the September glut, the forward calendar for transactions that have been mandated is now quite a bit thinner for October and November, but is nevertheless significantly above the last 2 years' historical average. We've also seen strong retail inflows into U.S. high-yield and loan mutual funds, which have the ability to invest a certain percentage of those funds into the European loan market. Focusing on the secondary loan market, this chart details the average price of LCD's European Flow Name Composite, a measure of the 18 largest, most liquid loans consisting of 10 issuers since 2002. The secondary market was up almost 50 basis points for the month to close at 95.97. For the third quarter, the average bid has gained 266 basis points and now is close to the 2010 peak of 96.75 that was last seen in April this year. This next chart details the average price of LCD's European High-Yield Flow Name Composite, a measure of the 12 most liquid high-yield issues since the beginning of the year. The high-yield market rose by a little over 2 points to close the month at 98.61. For the third quarter, high-yield bond bids rose a whopping 679 basis points, reversing the decline seen during the second quarter, and now stands at an all-time high for the year. Looking ahead, players expect continued inflows into both high-yield mutual funds and prime rate funds in the U.S., as well as better sentiment to keep prices buoyant in the secondary market for both loans and high yield. Fundraising on the loan side in Europe remains slow-going, though with a quieter primary market combined with some repayments from various sources including bond for loan takeouts, secondary LBOs, should result in sustained support for secondary prices. This chart details the return of the LE, a broad measure of European loan market returns that LCD calculates. The European loan market posted a gain of 1.75% for the third quarter, up from a negative 0.14% during the second quarter. The year-to-date return for the LE stands at 6.14% positive, and for the month of September, the European loan market posted a gain of 0.96% positive. These are total returns, including currency. Now from the secondary, we turn to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. New issuance for leveraged loans during the third quarter stood at $11.5 billion, the highest quarterly levels seen since the beginning of 2009. High-yield issuance stood at $9.9 billion, slightly down from the second quarter reading of $10.2 billion. September's new issuance stood at $5.5 billion for leveraged loans, as several large deals were launched to the market, including P-Card, RBS WorldPay, Burger King, and Autobar. High-yield issuance for September stood at $4.7 billion. The forward calendar, which tracks deals that are announced but not launched, has fallen from $7.7 billion at the beginning of August to $1.3 billion before finishing off the month at $5.4 billion, as the large but bank-focused Tata Steel refinancing entered the forward calendar. Default rates continue their southwards migration, The default rate by principal amount decreased to 5.33% at the end of August from 5.85% in July, while the default rate by issuer count decreased to 8.62% at the end of August from 8.94% at the end of July. In summary, the market tone feels healthier than it has done for 2 years, and there are good grounds on which to build up the primary issuance calendar, whether for the fourth quarter or into early 2011. Even if loan issuance is somewhat quiet for the next 6 weeks or so as we approach the end of the year, high-yield activity will roll on, including refinancing and potentially more issues to support M&A activity. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including U.S. loan market wrap-ups for September and October. The link to the page is in the description for this video. For more information on LCD news or research in Europe, please contact Anna Cini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.